Good day. Welcome to Hive Capital's trading journal. Um, Today we'll be looking at the pound dollar. Okay, let's start. Let's get right into it. On the daily, we can see that price is trending in the upward direction, or it's trending up. So we'll be looking at mostly buy setups. We might get some shorts, but our main focus is uh, buy setups. So let's begin our analysis. I start my analysis on the 4 hour. I get my buyers on the daily or weekly, then do my analysis on the 4 hours because I usually take trades on the on daily basis, or I can take maybe 2 trades per week, 3 trades per week, something like that. Or I can take trades from Monday to Friday. Depends on how busy I am with other things. So let's go. Okay. As you can see, we already have our buy bias. Now our job is very simple. We need to identify um, indicators, not the indicators which you use to tell you what's happening to price or other technical indicators like RSI or those things. Not those type of indicators. We're looking for price action indicators. So as you can see, price is in some sort of consolidation cycle. And we have a bias or a bullish bias. So you can see that, okay, price is supporting itself in this area. So we need to identify what indicator is causing price to support itself here. So what I can see is a fair value gap here. Let's write it for our fair value gap. Let's extend it all the way here. Okay, good. So you can see this fair value gap is from this week to that week over there. You can see that price is supporting itself in this area, which gives us another, which gives us an indication that, okay, our bullish bias is correct. So we can look for buy setups. So now we can see that, okay, price, the last time price touched the fair value gap, it moved up with a strong bullish candle. Then it formed this flag, which indicates that price can shoot up at any time. So another thing we need to do is mark our targets or liquidity points. I use liquidity points as my targets because I know that price is drawn to liquidity. So, okay, let's change the time frame to get a better perspective. I think most people might wonder, okay, why is he going on the 3 hour time frame? It doesn't matter what time frame I choose. I choose the time frame which gives me the best perspective, or which gives me a better view, or which gives me an advantage of understanding what's happening here. As you can see, okay, price was trending down here, it came here, touched the support area here, which is the fair value gap, formed a strong bullish candle, then started consolidating again, forming this flag pattern right there. What we can identify is this. Okay, before we identify that, let's remove that. We see that price trended downwards, right? It was forming this highs, lows. Then this strong candle right here broke this last high. So when that happens, we have a change of character, a change. a chart indicates that now this downtrend that price was on has ended, and now price is shifting to an uptrend. So this chart right here below, every chart there's an area where price needs to come back to touch and then move, and then execute its primary move. So this chart right here has an order block. So this is our order block right there. Mark that. We need to mark that properly. Okay, let's mark that properly. That's good enough. We need to label that so that we know what it is, 3-hour order block. So labeling helps you remember what's what or what's happening. So as you can see, we have our change of character on the 3-hour. Then below the change of character, excuse me, below the change of character is our order block. So this area is where we're going to execute our buy order to take out this liquidity, and the other one residing up there. So now we need other factors which influence price to come here and touch this order block, then run away. So one thing we know about price is that price needs liquidity for it to make moves. So what can we see? Liquidity here and here and here. And where is this liquidity resting? Below an order block, below the area of interest, or POI, right? Or point of interest. Others call the area they're interested in a POI. So I could have called this area a 3-hour POI, but I'll call it a 3-hour order block because of this order block right here. So we've identified these 3 points of liquidity. Then now that also gives us confirmation that, okay, price is gonna short to this area right here, take out this liquidity. It might not necessarily touch the order block, it might even come here a few pips above the order block, but it might even enter the order block, then swing to the upside. So we're not going to mark these liquidity points. We don't want to make our chart messy. What we need to mark now are reasons for price to come to this order block, then go up. So what can we see? We can see this fair value gap right here. Let's call it the 3-hour fair value gap. So 3-hour fair value gap right there. Our fair value gap. Okay, we have our 3-hour fair value gap. This is an order block right here. This is an area of supply. The supply area below it, there's a fair value gap, which price reacted off and it went down. So that gives us an indication that, okay, price reacted off this area, created liquidity, came back up. There's an order block. This one, this green candle right here is an order block, but for people who want to short. So this indicates to us that, okay, price might go down. So we need another indicator to tell us that, okay, price has a higher probability of going down. So let's go to a lower time frame to try and understand what's really happening. Okay, we go to 15 minutes. You go to the time frames, which gives you a better perspective of what's happening. If we come here, we can clearly see that, okay, price was trending upwards. Then it was creating a high, low, a high and a low, a high and a low, a high and a low. Then this low was broken by this move downwards. So we need to mark that, because what that is a change of character. And when there's a change of character, there's market shift into a different trend. So market was trending upwards for a short period, created a change of character, it went down. Now price is coming back to touch that change of character, then go to the area of interest or the 3 hour or the block. So this chart right here in this resistance area, which is the 3 hour fair value gap, gives us another indication that okay, price will come and take out these liquidity points right here, which we didn't mark on the 3 hour. So what we can do, we have our confluences. Um, we now have logical reasons why price will short to these areas and then come to this area right here. Then from this area, it will run up to take those higher time frame liquidity points. So that's good. So what we can do, we can take a short trade, take a short to this point right here. We'll put our stop just above the fair value gap. That's good. So we'll short just to get a few pips down. That's just a short signal. You can take it if you want, or you can leave it. That's fine. Then our main trade is this one, the long one. So I'll put the stop for the buy signal just a few pips below for your spread, because you don't know how price will react when it gets there. So we can target our first liquidity pool right there. So this is our trade. So price might come here and it might touch the 3 hour order block, or it might turn a few pips above it, or it might enter and try to stop people out. So that's why we put our stop loss a few pips below, but it depends on what broker you're using. So yeah, generally that's basically the overall analysis of the pound dollar currency. So yeah, stay tuned for more videos like this where I explain how price will react and move. If you're interested in joining our free community, there's a link below the comment, Telegram link. You can join there. You can learn more. I post some extra setups there. It's free. There's no payment, or we don't offer signals. It's just educational content, so you can learn. But if you are interested in learning the whole strategy system or how I approach the market and the mindset, you can DM me directly on Telegram and I'll take you through it for free. Yeah, basically, enjoy your day. I'll post more setups. So we'll wait and I'll post the aftermath video of what happened to price. And I'll actually also post the results of the setups and the percentage gains or losses taken from this setup. Yeah, thank you.